AI is only useful for vertical, super niche use cases, like your background as an attorney. And so if a family office came and said, we want you to be a family office fixer for us, Kerry, and take care of all this 120 LLCs we have and help with this, that, and the other thing, AI tools that help you as a family office fixer with an attorney background and they're built just for you or they're built by you for you, that's the ultimate use case of AI.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. Hey, got a really interesting show for you today. There's a world out there called family offices, and you may or may not be familiar with them, but what you're probably almost certainly not familiar with is they control $14 trillion worth of wealth, which is a lot of money. And more than a lot of other entities out there that you thought were really powerful. Richard Wilson is with us now. Richard, you have sat across the table from billionaires, centimillionaires, and some of the most powerful allocators in the world. You've hosted 300 plus events, built a network of 7,500 investors, and interviewed over 100 billionaires. So first, what is a family office?
A family office is simply a solution for how to manage your money when you're ultra wealthy. So if you're worth $50,000, you may need to do certain things with your money. If you're worth $5 million, you need to act a bit differently. If you're worth $50 million or $500 million, you can imagine that just missing a single letter from a county real estate due or the IRS or one little mistake might cost you more than it would have cost to hire a full-time team just in the penalties, right? And so a family office is there to focus your energy, play defense for you, do planning, holistic thinking, and just manage the money wisely as you grow your wealth.
And are there tax advantages to a family office?
Yes, there are. I mean, if you structure a family office correctly, then there are ways to write off typically the activities of the family office, which may involve family members meeting to look at investments, family get-togethers to plan out what you should do with the balance sheet next, et cetera. But more important than that is that when you professionalize your family office, you get in touch with family office quality, trust and estate, and tax planning professionals, and you have people doing the things you shouldn't be doing as the wealth creator anyways to free up your time to actually get tax planning in place and play offense on your balance sheets. That's a real benefit of having it in place.
Do they get carried interest, although that's supposedly going to be eliminated? Can they get carried interest treatment on their taxes?
They're treated the same as other investors, quote unquote. It's just that the most complex, sophisticated structures on planet Earth can be afforded by this group. So if there is a way to plan around some types of taxation, you can bet that a percentage of the family office industry is playing that game. But to be honest, a lot of family offices are just super founders. They're just super entrepreneurs that make 7, 8, 9 figures a year or had an exit at that size. And so now they look around and say, oh, what's this family office thing? Oh, maybe I need one of those. Or maybe I already have part of one put together. How do I formalize this? And then there's just a full spectrum of types of family offices out there.
And how did this industry emerge?
Well, folklore says that hundreds and hundreds of years ago, people had their kingdoms and built castles around it and people to protect their wealth and manage it. I mean, who knows, right? And then, Rockefeller and those types had quasi-family offices. The reality is that the term started being used in the 60s, 70s, and 80s more often. When I started this in 2006, 2007, people told me I was wasting my time and that the family office thing isn't real. And now, as you mentioned, they manage $14 trillion, more than all of venture capital and private equity combined. So it really started by people realizing they need a higher level, more holistic, more medium to long-term solution than a regular high net worth person who's just mass affluent. So that's what's really driven the need.
So is there a particular area their investments are focused in? Is it mostly real estate, stocks, bonds? Where are they putting their money?
Yeah, really good question. So here at Family Office Club, we're often, talking about that on stage at our events and surveying our investors. And what's interesting is that when somebody's created their wealth in an industry, they might not want to go back into dentistry after selling 20 dental practices, or they might not want to go back into owning an auto dealership again, or whatever that niche is. But they have so much expertise there. They typically play offense in the space they made their money in, or in one or two new niches, and they choose those niches very carefully and do a medium to long-term focus there. And that's where they play offense. And typically, then they have a second part of their portfolio, which is where they invest in real estate. Almost everybody wants hard assets like real estate, no matter where they made their money. They sleep at night knowing they have cash flowing real estate in their portfolio. And just about every family office has public market investments. And that's where it's like almost pure defense. Some people are aggressive in the market and they'll say, hey, I like Costco, or I like Amazon, or Tesla, or not, et cetera, right? But they're mostly outsourcing the stock market investments, and it's almost pure defense. On real estate, they're mostly outsourcing, unless it's right in their backyard or it's where they want to play some offense. But in the offensive area, it's usually where they made their money, or in a niche they're really dedicated to.
Got it. And so it sounds fascinating that there's all this money there, and it's evolved over time, and now it's really a legitimate investment sector, if you will, of the economy. And what kind of returns do these family offices look for? Are they just defensive, or are they going for big returns?
The most common statement in the family office industry, which is not helpful at all, but you'll hear at every conference, is if you've met one family office, you've met one family office, and they're all different. But that doesn't help listeners at all, right? It's kind of like a non-answer. And so what I like to think about it, when you look at the family office space and you're wondering what returns they like, I think about it like looking at the animal kingdom, and you look at the genus and species, and you look at birds. They're going to act like each other. Spiders act like each other. Different types of snakes act like each other. And so when you look at a first generation family office that made their money in Silicon Valley or crypto, they're going to act very different than a first generation 84-year-old who made their money in manufacturing, right? And so what you need to do is just classify family offices into like, is this first gen, early second gen, third generation wealth? Is this new wealth that made their money by taking big risk? Or is this conservative wealth for some reason? And then that really narrows down how you work with the families and what they're looking for. Because the spectrum ranges, right? For big families, for their diversified investments, many of them are just looking for, 8 to 12% a year returns. They would love to have 10, 12% a year blended over their entire portfolio. But where they play offense, they want to have amazing returns long term, and they expect a lot. Where they're playing pure defense, they generally want to more than trap real inflation, not what the government states as inflation, and be wise about that.
All right. So you mentioned crypto. I'm sure that's an area that more and more family offices are getting into.
Yeah, literally in 2011, 12, 13, we had 18 to 22-year-old kids sponsoring my events. As you mentioned in the intro, I've done 300 Investor Club events now, and last week we had 400 people at our event. And the crypto kids would literally get laughed at on the stage by the gray-haired real estate people in the audience. And it was probably one of the most rude dynamics I've seen, honestly, in 18 years doing this. Like, literally would laugh out loud, being like, new currency? Get out of here. Who is this dumb kid? Who invited this guy? Those people don't need to speak at my events anymore, right? They're worth hundreds of millions of dollars. So I think what family offices see that's related to your question is they see these waves rolling in. I'm based in Hawaii, and they see these sets of waves. And whether it's sports betting getting approved in many states, cannabis, crypto, some other trend. It may be against or not against your morals to invest in something like cannabis, and you may think AI or crypto is evil or awesome, et cetera, but they notice these waves over time. So they lean forward and say, okay, I missed another wave. Maybe I should lean into the next one or just put 1% to work in it early on,
So, and now crypto is obviously being integrated into the financial system, ETFs. Every brokerage house is looking at them. I don't know about the others, but certainly Bitcoin. I was just at the Bitcoin conference in Las Vegas.
Yeah, I had some friends there.
A lot of money there. I mean, I know people, guy who it was $5 said buy it, and or actually it was 10. It had gone up from 5 to 10, and I said, nah, I'll wait till it goes down to 7. Well, of course I never bought it, but I did buy it later. But
that's awesome. I mean, to answer your question more directly, though, family offices are in crypto largely. A lot of them have 1% to 4% of their net worth there. A lot of them, like me, might have small bets in 20 or 50 different crypto coins, but then have the majority in Bitcoin and then probably Ethereum as the number 2 asset out of the crypto world. I think many less have any exposure to NFTs, but a lot of them do have investments in crypto, just to make sure I answer your question directly.
Right. So obviously that's an emerging area. Are there any other areas that you see? What about AI and such? Are they getting heavily involved there?
Yeah, they are getting heavily involved. I mean, some of them invested a decade ago into different AI companies, but robotics is something that they see as completely inevitable and exciting. And there's only so many robotics plays that are obvious right now. So investors are really leaning forward on robotics. They see that sometimes it's more tangible. I mean, there's 75,000 AI companies out there. So figuring out which ones are going to win, it's like a little bit difficult, right? But robotics companies that have a lot of traction, there's not 75,000 of them out there. And the future of robotics, I think, is massive. So those are 2 areas that come up a lot: artificial intelligence and robotics. And I've actually spent a lot of this year building out 30 artificial intelligence tools for our investor club, and we share those at all of our events. So we're always talking about AI as a community.
Yeah, well, I'm not surprised. Some of the most sophisticated investors in the world, of course, they're going to be looking at these latest trends. Does AI have any effect as far as what you're doing?
Yeah, it does for sure. One of them is that we have found that due diligence goes faster, and it's really emphasized that meeting in person is super critical. With AI, you can fake anything on a video. I could be an avatar right now, and I didn't even show up for this podcast. And, so you can't believe a due diligence room. You can't believe a video. And when we had a centimillionaire on stage last week, he really emphasized that when he invests money, he's investing in the character of you. He's investing in your values, your intellect, and him trusting you. And if he doesn't want to give you a hug or spend time having dinner with you or invite you over to his house and doesn't really trust you and like you at that level, he doesn't care what your one-pager says your IRR is, or what your payback equity multiple will be, or how profitable your company is. If he doesn't trust you, none of that matters at all, because anybody can print out a piece of paper that says amazing things. And so I think that's really getting emphasized with AI, like meeting in person is even more important now.
Yeah. So it's interesting that the exact opposite has occurred, right? Now they're looking for real physical contact, whereas before a Zoom call might have been okay.
Right. But ironically, because of AI tools, every minute of the day, somebody sets up a new campaign to cold email 30,000 people from a throwaway email address and switch up the subject lines and the one-line email to get responses to book meetings on a calendar for someone, which makes email responses even lower than they were yesterday, because everyone's getting all these cold email blasts all the time from these AI tools that, are being used nonstop. And so it makes communicating with investors harder, and people feel like, oh yeah, I'm being smart. I need to cold email these 10,000 people, but maybe they'd be better off just meeting with 10 people and developing a real relationship than emailing 10,000,
Yeah, gotcha. Gotcha. So quality over quantity, right?
Yeah, for sure. And then also, it's really changing everything from, like, if you have a 70-page pitch deck, we gave away a week-long trial to a tool today. We're happy to give it to your users or listeners for free if you'd want. But it takes a 70-page pitch deck for your essay-long email and reduces it down based on 1,000 investor talks on stage and also 25 criteria. So you have one line pitch that summarizes your whole pitch deck based on 25 criteria in a single sentence. And if you're not doing that, then no one's going to read your essay long email, right? Even if it is a personalized email, they just don't have time to read it if they don't know you yet. And that saves time for the investor, it saves time for the person pitching that doesn't have to write an essay now. And then there's also AI tools out there that, like one's called Dewey, that we programmed out, and we trained about 150 white papers on due diligence. So you can upload 10 pitch decks and say, rank these based on asymmetrical risk. Tell me how experienced the CEO is. Let me know which one is least likely to lose all my money in a worst case scenario, and then make a table of all that. So, like,
least bad. Who's the least bad of the bunch?
so like that's like a game changer for investors, right? I mean, you could fire someone that you hired full time just to screen deals and just use AI nowadays. And I think that's the number one thing that came up at our event last week that's not answered. What is the solution to 30% of white collar jobs being gone in 18 months? How many pitchforks are going to come out?
That's what I want to know. And of course, nobody is able to answer that question, are they?
I mean, the best answer I've heard is, well, you know what? Last time I hired a plumber, it cost more than my attorney. So maybe a couple million people could become electricians and HVAC fixers and plumbers and tradesmen. And maybe every high school career counselor shouldn't be beating the college drum and going 300,000 in debt to get a history degree. You know, like that's the only good answer I've heard lately.
Yeah, well, I kind of agree with that. You know, I think, but how many plumbers do we need, and how many electricians and handymen, right?
Right. We need more, probably twice as many as we need now. But what about the rest of people? We don't have an answer for the rest of that. And if there's a way to solve it, we're going to have to come up with the answers. And the politicians are going to be flat-footed on how to answer all those angry, upset people, which, maybe they should be upset, right? They got displaced by AI and it's going to feel unfair. And I don't think that's being talked about enough. I think it's like, besides the fact that our country is going bankrupt with debt, I think that all those people getting their pitchforks out in 18 months from now is not going to be pretty.
So we're talking, we're kind of drifting off what you do, but I'm really curious because I think about this. You're thinking about it. More and more people are thinking about it every day. You need to think about it. Like, we already know, like, guys like loan underwriters, insurance company underwriters, and loan processors for mortgage companies. Basically, that job market's going to cease to exist, right?
Right. Call centers, right? You have 1,000 people in a call center. Well, now you just train one agent and it answers instantly, never is in a bad mood, never remembers the wrong information, always cheerful, never asks for a raise, and it gets smarter every day, And
no coffee breaks, and they're never sick, and all that good stuff, right?
Infinitely scalable. Yeah, there's so many good things that'll come with AI, and it's so exciting. And when COVID hit, we had to go that year from 30 live events to 0, and for 10 days, freaked me out a little bit that we had to do that. But I realized the faster we pivot into being virtual, the better our events go. And I see that same with AI. The faster I pivot into AI and go super deep on using artificial intelligence, the better it is for our business, and it's very exciting. But how to be compassionate about how do we help the 10 million people that will be displaced really soon? And maybe there's a business way to do so. So it's not a nonprofit that may or may not be wasteful, right? I mean, I try to think about that a little bit.
It's worse than 10 million because we're also talking full self-driving. All right. I've had a Tesla for a lot of years already, and the full self-driving went from a nice feature to just keeping another set of eyes on the road to replacing you. I mean, it's that to that point. I mean, I really don't drive my car most of the time. It drives me. I went from being the driver to being a passenger in my own car the only thing I do is tell it where to go. And pretty soon I think it's going to be telling me where to go. And the largest, Richard, the largest job segment in the country right now is driver at all levels. Truck drivers, armored car drivers, taxis, Ubers, driver. That segment's going to disappear, maybe not in 18 months, but I would wager within 36 months, it will be gone. That's how intense this is.
This topic is directly tied to cryptocurrency, directly tied to seeing the sets of waves coming in, because Peter Thiel says the way you predict the future is you find something you're high conviction on that nobody else sees yet, and you go really hard on that when everyone else thinks that the market doesn't exist, or you don't know what you're doing, or it doesn't make sense. And no one has an answer to, what are we going to do about replacing everybody,
I'll give you another one. All right. I call it Trump GPT.
Yeah.
The whole strategy of Trump coming into office was set up and executed by AI. There's not a question in my mind. I can see the waves. You use it a lot, obviously, as do I. And I see the waves there. There's just certain phrases, all those executive orders being ready to drop. It's even gone to the point where the litigation strategy of his opponents was game planned and prepared for ahead of time, almost to the point where the documents were drafted and all the legal hot points and the hot areas, all of this was anticipated. Same thing with the trade negotiations. Wrote an article about that. It used to be once upon a time, the diplomats sat down and they hashed out an agreement, and it took forever because they were busy globetrotting to, 5-star resorts and Michelin-rated restaurants and downing prodigious quantities of champagne and Bordeaux. But all that's changed now. Those agreements can be banged out in a matter of weeks. But nobody's understanding this except you and I, Richard.
Yeah, I mean, it's interesting. I think there's people that think AI is evil and don't use it at all. There is a large barbell of people who use GPT, almost like Google, or to look up recipes or just look at individual little searches. And then Sam Altman says at the other end of the barbell are the really big power users. And those people are doing so many deep research things per day that the thing that's limiting them is their time to read through the results of the deep research and then put that to use. That's where people are at right now, right? So you have to ask yourself, what side of the barbell are you on? And that's going to determine if AI is good for you or not, I think.
Yeah, well, I think it's unescapable and unavoidable where we're heading here, because the genie is out of the toothpaste tube here.
For sure. I mean, you can either complain about the new reality or adjust to it and be nimble and agile and make it good for you and your family. I mean, that's the only two options I see,
Yeah. And that's really it. And it's not like you particularly need any training. For a while, prompt engineer was a hot topic. But as you work with it, it adapts to you and you adapt to it. And then the question is, how soon before it becomes self-aware? Is it already self-aware? A lot of people out there, and I have to include myself as one of them, think that there's something more here than just chips and code.
Right. I mean, some would argue it's already more self-aware than some human beings I interact with. But I think that one thing that's...
I want to use that.
I did see another quote that said that AI actually hallucinates slightly less than human beings, but just in, less predictable ways. You can imagine how a human being's going to hallucinate about how big a fish they caught or, how much whatever costs, et cetera. But I think what's most important here is just to think about where the future is going, position ahead of it, and to, the best investments are the ones that are not what everyone is thinking. It's things that other people think is a bad investment or think is toxic. If you follow the herd, you're going to be at best average and probably a little bit behind average, right? So you do not want to sell after everyone's sold. You don't want to invest and be the last person who invested before it came down. So the other thing is that we talked about this last week at our event, is that AI is only useful for vertical, super niche use cases. Like your background as an attorney. And so if a family office came and said, we want you to be a family office fixer for us, Kerry, and take care of all this 120 LLCs we have and help with this, that, and the other thing, AI tools that help you as a family office fixer with an attorney background, and they're built just for you, or they're built by you for you. That's the ultimate use case of AI. Like, it's only so useful to have a generic model. So you can ask questions, and the GPT model is fed by Wikipedia, everything on Google, and 300 million, well, now 800 million monthly users. So do you want answers from 800 million random users? Or do you want answers from 100 other family office attorneys or 1,000 investors who have spoken on stage at our events? The answers will be completely different than what Wikipedia tells you, you know?
Yeah, well, don't even get me started on Wikipedia. I'm waiting for my entry. 14 years. You know,
Right.
I'm more podcast than anybody else out there, but I'm not noteworthy for whatever reason. But another thing you just mentioned, okay, being a recovering attorney, in fact, being America's top recovering attorney.
Yeah.
I could tell you that 80% of the lawyers out there, there's no purpose for them being out there, but they haven't figured it out yet. I'll just tell you a brief personal example. I had a friend, and she in Florida, that's where I live. She wanted to amend her will, her trust, quit claim her condo to the trust, healthcare proxy, and HIPAA waiver.
Okay.
That's something like, hey, being an attorney, I was connected. I paid $1,000 5 years ago. It's probably still okay. But they wanted like $3,500 to $4,500 from her. And not a lot of money, but it's not wealthy.
Right.
And that's, all right. I said, all right, Rose, come over. Let me take a look at it. So I sit down, I scan all the documents in. And that's the thing that most people don't know, is that the AIs read the image as if you were reading it.
Right.
I said, make me a codicil to the will. Boom. 15 minutes. Had to tweak it a little bit. It didn't do everything perfect. I said, okay, let's have an amendment to her trust. Boom. Done. And make me a quit claim deed. Boom. Done. I put in the legal description. I checked that. And then the other things, it just instantly did them. And I didn't charge her anything. But when I looked at that, and then I've done other things legal related, even though I don't practice anymore.
Right.
So, man, like, those guys weren't out of the ballpark unreasonable. It's just they're completely unnecessary now. They should have been doing it themselves and charged her $500. And 15 minutes worth of work for $500 is not so bad. The only negative, she had to go to like mailboxes, et cetera, to go get it notarized and witnessed. But outside of that, it's like, what value does the attorney bring to this process anymore?
Right. I mean, importantly for the listeners, I mean, you have a background as an attorney, so it makes more sense for you personally to rely on AI. And then with your attorney brain, you can review it, make sure it looks reasonable, make sure it's accurate. We had somebody last week that said you should not get tax advice from GPT. And what's interesting when hearing that is his name is John, and he's super smart, and I get why he would say that. But at the same time, could your tax advisor miss something? Of course, they're human, right? But also, imagine you interviewed John, got his book, got his 1,000 podcast episodes, and trained a little AI sandbox on everything John has said over a decade. I believe that AI tool, because it's all from John's mouth, right? And it still could have mistakes. So you still should have someone review it. But I think those types of combinations of AI plus human, that's where the magic happens, right? Versus blindly relying upon AI.
Well, I'll tell you a little secret here. I'm sure others are out there doing it, but no question.
Sure.
It's the thing called AI stacking. And you take the work product from one AI, start with Grok because it's going to produce it faster than anything else out there. And it's getting even faster. And then you throw it over to chat, and then maybe you go to Claude, or like there's certain ones that I feel are personally kind of useless, like Gemini,
Okay. Yeah.
or DeepSeek is completely useless because it can't even find Tiananmen Square on a map, right? It's useless.
Right.
It's just so constricted. And others are corporate bloatware, but there's 3 or 4 out there that are first class, gold standard. To me, chat is the gold standard, but they've deliberately failed to update from 2023. Something happened in 2023, and they don't want to go any further. But Grok, it's off the rails. It's just a little too Wild West.
Yeah. Sometimes it can be. I mean, the best legal related thing that we put together that's been super helpful that no attorney could do as a human is we trained it on 1,000 deal structures. It's called Deal Structure Ninja. You tell it what you're solving for, what you're negotiating, what could blow up the deal, what you want to prioritize in the deal structure, what the counterparty wants. And then it lists out 10 deal structures. And you say, I like number 2 and 6. Show me 10 more like that. Then it does 10 more, 10 more, 10 more. Then you say, I like number 9, just add this little component. And then it'll ask you if you want it to write the email to the counterparty and the attorney on why it's a win-win-win deal structure for everybody. Like, how can an attorney do that for you 24/7 instantly? Like, no attorney knows 1,000 deal structures and can knock out 10 in 5 seconds, right? It's like, it's crazy. So I think that type of stuff is just game changing. It could change somebody's life having the right deal structure, as you know, in a deal, right? So I'm excited by stuff like that.
Yeah, no, I totally agree with you. It's amazing what it can do.
Yeah.
And hey, taking enough of your time. I appreciate your coming on. People out there want to connect with you, find out more about you. You got a podcast. Where do you go?
Yeah, so we have the Family Office podcast, but our website for Family Office Club, where we have 1,000 active investors and we meet 16 times a year, is at familyoffices.com. And my email is just richard@familyoffices.com.
All right. Those links are in the show notes. This interview on financialsurvivalnetwork.com. Really appreciate you coming on. It's been educational for me. Maybe I could have found out a lot of this from AI, but better to find out from you because you give the human touch to it. The AI is a little too sterile.
Well, maybe I'm an AI bot and you just did hear it from AI. We'll never know, right? So appreciate you having me on here.
I have a feeling not the case, but thanks for coming on. Hey, if you've got any questions for Richard, myself, shoot me an email, kl@kerrylutz.com.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.